You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts, Uncle Mike TOSAW from St. Charles Wealth Management, along with Mark the Greasy Meatball Sebastian and Andrew the Rock Lobster GIOVINAZZI from OptionPit.com. And now, get ready to hit the Option Block.
All right, everybody. That music means it is time once again to commence operations here on the bi-weekly options extravaganza known as the Option Block, what the cool kids call the old OB. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-compelling network upon which so many of you are binging these days, coming off the heels of the hottest month in the history, 15-plus year history of this here options podcasting business. And we kind of go back to the beginning because we kind of launched the first options podcast back when there was no iPhone. You had to have an RSS reader to get it. Pretty early days. Maybe too early. But fun times were had nonetheless. And we're still having fun times. So you guys can help that keep continuing out there. Of course, if you like what you hear on the on-demand side, you're one of our legion of on-demand listeners, then get over there to your platform of choice if you haven't done so already. Leave a review. You could clearly, demonstrably see the new reviews are more important than ever. And then, of course, if you want to go above and beyond, you want to join us for all the exclusive content. So pro Q&As, options oddities, giveaways, all that fun stuff. You want to get access to any show you want on the network live whenever your schedule allows it. Theoptionsinsider.com/pro is the place to go to learn more. And of course, keeps those questions and comments coming. We do love to hear from all of you folks out there. Let's see who we're hearing from on the old program today. First, let's go out to the dark, stormy, tumultuous, upheaving shores of Maine, where we are joined once again by the rockingest of lobsters, Mr. Andrew GIOVINAZZI from OptionPit.com. Mr. G, we missed you on Monday, but I guess, I understand when you want to avoid the wrestling days. The 80s wrestler is not exactly your forte, sir.
Well, I struggle with the wrestling. I think I can maybe pull something out of my memory banks from 40 years ago, but sometimes
you've got a good Hogan, maybe a Macho Man, maybe an Andre the Giant in you, then it kind of falls off a cliff.
Yeah, and then it falls off. Although I did read today that Vince McMahon is his board is investigating.
Yes. Quality skullduggery continuing behind the scenes at W. The same day that's announced, the stock was up another 5%. That stock has been on a tear. If you want to look at a stock that seems to have been insulated from the most recent market shocks, at least for this year, WWE has done nothing but go up this year. It's almost $70.
Yeah, it's amazing.
It's insane.
And actually, what's funny is like the fact that this board even bothers to investigate this, like the whole WWE is intrigued. Like,
it is all shadiness. Intrigue? It is all shadiness. You're right. But yes, I guess this has gone a bit too far. Where there's smoke, there's fire. This is just the beginning. They will uncover others. And people have been wondering for a while, what does WWE look like without Vince at the helm? Maybe this is it. Slowly but surely, they've been ousting all of his family from the company. There are people out there on the Twitterverse, the Twitterverse is crazy, who say this is all a plot by some of his underlings to usurp control of the company away from the McMahon. So we shall see. So far, the stock, I'm not sure what the stock's doing today, but yesterday it was on a tear. Oh, it's finally selling off 1.6%. It's still $65.50. This stock was about to break 30 at the beginning of the pandemic when it looked like WrestleMania was in the toilet and everything else. So this thing has had quite the resurgence in spite of everything else going on out there. So there you go. If you wanted a somewhat market shock immune name, WWE fill in the bill. All right, who'da thunk it? And also going out, usually we go out to St. Charles. This time I believe we're beaming to a locomotive en route somewhere between downtown and St. Charles. We are joined once again by the uncleest of Mikes, Mr. Uncle Mike TOSAW from St. Charles Wealth Manager, who since the last time we chatted with him has been all over the place, hither and yon. Uncle Mike, sir, welcome back to the show. And where have you been since the last time we chatted?
Always a pleasure to be here, no matter where I have to broadcast from. The Uncle Mike might go to different spots, but the option block goes with him.
As we keep on rolling, it is time to get weird. It is time to get wild. It is time to see what these weird and wild markets are up to. It is time for the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, everybody, welcome to the trading block, the portion of the show where we break down what the heck was trading. And we all know the whole week was pretty much geared around the Fed. What was the Fed going to do? What was the Fed going to do? And definitely leading into the weekend, the narrative was, okay, we have to do 50 basis points. We have to do 50 basis points. As the week kicked off, it seemed like the narrative shifted and the market swung more along the lines of the 75 basis point tip. And that is where we ended up out there. That's where you folks were lining up as well. We did a quick flash poll right ahead of the big Fed announcement. You guys are on the ball this time. We asked you, what do you think the Fed's going to do? 25 basis points, 50, 75, or a full point. And exactly 50% of you said 75 basis points. So you guys were on fire with this one. 34.9% saying 50 basis points, 2.3% saying 25 basis points, and 12.8% of you going savage. 12.8% of you, I should say, going savage, going for the full points out there. You know, weirdly enough, you might think, wow, 75 basis points, the largest raise since 1994. Man, the market's going to take it on the chin. No, it was Rally-Ho Day, one of those relief rallies. Hey, here we go. The specter, the boogeyman of inflation is so big now that anything that doesn't seem to just stick a nail right in the heart of that inflation is seen as terrible. So less of a cut would actually probably have been bearish for the market. So the market actually rallied off that news. Coming into today, we saw the probably more actual reaction to that 75 basis point raise and what that means for the broad economy, because the markets are taking it on the chin. Yet again today, S&P, when we kicked off the show, off close to 3%, about 2.9%. It's like it's struggling off to try to rebound off the lows. Yeah, how low did we go on the limbo poll here? It looks like we got to about 36, 60, 61. We just broke 62 ever so quickly. Then we rebounded off those levels, coming at 36.80 or so when we kicked off the show. Still down nearly 3%, and obviously well below the levels we were talking about not too long ago, well below that 4,000 level, well below even now 3,700, even though we are maybe about to reclaim that level. We'll see if this rebound can have a little bit of steam. The Dow off about 2% and the NASDAQ off about 3 2/3%. That means even though we've seen a lot of living since our last show, since Monday, vol is very elevated right now. So it takes a lot to maintain it, as witnessed by our vol levels. Coming into the start of the show, VIX cash actually down from Monday's show. We were at about 32 3/4. For a while there, we were hanging out at unched right around 33 1/4. And as we started to rebound off the lows, you saw VIX start to come in a little bit off the highs of the session. So we are no longer unched. We are actually down about half a point from Monday's show. But again, that shows you how much living have we done over the last 48 hours. It's still vol effectively unched, which is shows you how frothy things are. If you expected a big pop in vol out there, we're kind of already there, so it needs a lot to take it to the next leg up. VVIX, 113, so back up above triple digits, listeners. Up about 4 points. It was up more. It was up to about 116. That has come in a little bit right before showtime as well. VXX, 25.5, literally unched from where we were on Monday. UVXY, same deal, 17, literally unched from where we were on Monday's show. SVIX, 9, almost 9.5, about 945. SVIX, of course, the inverse vol product out there. That one unchanged as well after flirting with new lows since inception, really, this morning, down below I believe it didn't get below $9. It got to about I think it got below 9.20 though. Let's see, maybe 9.15. What is the 9.14? That was the low coming in. So yeah, we flirted with that this morning. Now back up to about unched, close to 9.5. UVIX, the 2X VIX product, 22. That's up about half a point from Monday's show. And VolQ, when we kicked off the show, is at about a 37, which guess what is exactly where it was on Monday as well. So you have a whole lot of nothing on the vol stage today, which is kind of interesting. Let's go back out. Let's see if he has rejoined us here. He is the uncleist of Mike's from St. Charles Wealth Management, en route back to the Mecca of St. Charles. Mr. Uncle Mike, sir, what is lighting up your tape out there as you are en route?
Well, I think that with where we're going today in the markets, we're getting close to the third. We're below the 3,700 level slightly. With us being below the 3,700 level, I think we do need to be very careful in this market. I bought some more hedges this morning for my put spread, and I think it's important.
It's like we're losing Uncle Mike, so we will endeavor to get him back.
I'm here. Can you hear
there
me?
We go. Yeah, we lost you. You started talking about your put spread, then you went dark on us, sir.
Sorry about that. So yeah, I bought more. I hedged my put spread a little bit more today. So I think it's just a time to be cautious at this stage of the market in terms of where we're going. We're at a stage to where we were pre-Fed yesterday. We're down roughly, I believe we got down to 37.10 roughly before the Fed announcement. We're a little bit below that right now. So we essentially gave back all the gains that we took yesterday in the marketplace. So I think right now, this is another one of those moments in the marketplace where it's crap or get off the pot. What's really interesting is I believe the Fed has only raised rates twice all year with all the talk of it. And of course, yesterday being the 75-point raise and the 50-point raise the time before. But the fact that we've had this much of a bond sell-off based on only two rate raises really intrigues me, because that's really it's all based on expectation of more rate increases. So a lot going on right now, and caution is the key word.
Caution is key indeed. You know who's never cautious? He spits into the hurricane. He is the Rock Lobster, Mr. Andrew GIOVINAZZI. Mr. Rock Lobster, sir, what is lighting up your tape on these days when the markets are spitting right back at you, sir?
Oh my gosh, yes, there's spitting. There's spitting everywhere. Oh. It's kind of weird. Because I think the market stocks, they read the news. I find it odd. Like, so why is the Fed sending like a balloon through some strange news source? So why is the government using reporters to report official policy early? Like, I don't think this is all these leaks to the news. I don't think this is great, by the way. Like, you got the Supreme Court thing. Now you got the Fed doing this, like floated the 75.
Tinfoil hat. Here we go.
Like, weird. I'm sorry. I'm not a fan of it. Like, do your government business and then announce the stuff. So I'm not thrilled. I'm not thrilled with that, number one. So besides putting my tinfoil hat aside, right now rates are flying, right? So the EU has their own pickle. They've have these negative rates. I think most of this inflation problem is caused by, you can argue who it's caused by, but energy prices are going up. There's some supply squeeze, right? It's been exacerbated by, policy. It hasn't gotten any better. That on top of the supply chain issues and all that kind of stuff, from COVID and the lockdowns and all of this, the Fed really didn't either anticipate, or they didn't like how this wouldn't make things more expensive is a little bit beyond my comprehension for those guys. So plus and basically the needless continuation with QE and all the rest of it when people were just going back to work after this COVID thing. So I don't know what they were doing as far as planning goes, because they've been just trying this whole thing for 10 years and they figured it works. But anyway, at this point, it feels like they have to pull the plug on it at some point. Now, how far stocks go down, And if the Fed can really stay committed to pulling the plug on all of the artificial stuff that they've been doing, that, again, more tinfoil hat, you can argue it hasn't really done anything. All it's done is generated massive government debt. So you have to look at this and say, how low do equities go in the face of them actually pulling back for real? And every time the Fed says they're going to, they waffle a little bit. Like, okay, maybe we won't have to raise rates at all, which is, to be honest, which is fine, right? You raise rates a little bit, start to cool things off, right? And see where we go from there, which I don't think is terrible, but as long as they don't go to the battle QE days or any of the nonsense shenanigans and actually charge the federal government real money for borrowing money, I think that's going to put us on a better long-term path because at least the costs are real at this point. So I think stocks are trying to figure out, where that is. And I think that's where we find ourselves right now. So to me, I keep looking at where we were pre-COVID, like from a level for the S&P 500, that's like 3,200, 3,250, something like that. You look at a lot of stocks like Apple, and they haven't had earnings growth enough to justify the stocks going up 100 or 150 or 200%. Tesla has not had the earnings growth to justify going up, tenfold since early 2020. So there are stocks that are going to go back to earth. There is no question about that. And you're seeing a lot of it already. Like the expensive chip names and stuff like that are coming down to closer to realistic levels. So again, I think there's just going to be a lot of churn here as the market tries to get back to the Fed staying out. Okay, we're going to raise rates because there's inflation, but again, I don't know what that level is. 3,300, 3,400. I don't know. It still feels like it's a little lower than where we are right now. It's just, I'm not sure how much of a hurry we're going to be in to get there at this point. It could be kind of a slow grinding, number to get down there. And then it's kind of start all over again. So, will vol, we get this, everybody's saying we're going to get this vol capitulation. I remember in the old days, you do have some spikes where people kind of give up, and that's generally, and then the market just kind of sits there and dies for a little while. It's important that the Fed does not get back into the holding the market up game, I think, this time, because all it's going to do is prolong the eventual agony that is going to be caused by their prolonged involvement. I think there was an experiment they started 10 years ago, and at this time they should stop the experiment, quite frankly. So, but I would guess at this point, unless there's substantially better news on the energy front, like the Europeans are getting squeezed on energy because of the Russians, that's causing global squeezes. None of this is good positive news. It's going to hurt earnings. It's going to hurt lots of stuff. And there's right now, there's no solution on the horizon for any of it. The only thing that could be getting better is the supply chain issues, should be easing. I just look at my store shelves. They look like they got more stuff on them than they did before. So I figure the supply chain thing is easing somewhat, right? It's not like it normally used to be, but it's still, and it's not as bad as it was. So, somewhere in between here, things should be getting a little better. As far as VIX and volatility goes, I think if we have like one more day where you see we have kind of a rate shock, like the Europeans are going to have trouble with the Italians or something like that. And all of a sudden those bond yields become real again. That could cause the market to crater. Because if you guys are calling like 2011, the Europeans with the whole euro crisis and all that caused a lot of global instability. And it would not surprise me to see that happen again, because I don't know if they've really improved their house much in 10 years. So I think all of these things are kind of coming to a head now, and that's why we have the market turmoil that we do. So, many years down the road, things could be better. But for right now, any stock with a high multiple, any high growth number, anything is getting drilled. And I think, funds have to sell the stuff that made them money, right? Because they've got problems in other places. So that's what's going to happen. Wouldn't surprise me to see, it wouldn't surprise me to see Apple get somewhere around 100 this year. I know that sounds nuts. But I just think those dollars are going to come out. I think Tesla go down another couple $100 pretty easily. Because those dollars are going to go other places, right? So anyway, I know that sounds kind of bearish and gloomy, but that's the market that we have and that we've had in 2022. I mean, you have to be realistic. I mean, we're kind of at the low point of the year, and things have not gotten a whole lot better from a policy point of view, from a fiscal point of view, really any point of view. So, but there's always room. There's room for hope, and that they can improve policy, and somehow that will change things around. So that's where we are.
That's where we are indeed. Let's see where we are from an overall markets perspective. And, a lot of our indices rocking and rolling right now. The one index that you'd think might be doing something today, known far and wide as the fear gauge. If you looked at the numbers back, I had to check them again to make sure something wasn't wrong with our system. You might think VIX thinks it's like maybe a lazy day in August, because there are a whopping just ticked 260,000 contracts on the tape. So we're pretty much not even halfway to the ADV out there today, listeners, on all the madness, all the Sturm und Drang going on out there. Usually a day like today, a lot of red on the major markets. Not so much green on vol space, kind of unched, but still, that probably has something to do with it there as well. We are already elevated, therefore not a lot for folks to do. But still, intriguing that we're only seeing 260,000 contracts on the tape. We could see that on a quiet Monday, like I said, in August or December. We're seeing it today instead when the markets are off pretty much 3% across the board. So interesting stuff. The ADV still hanging out right around 560. So again, not even halfway to the ADV. SPY, a bit of a different beast out there, which you would expect. SPY not exactly in the same boat as VIX. SPY, 4.92 million contracts on the tape right now. The ADV a little bit north of 7, about 7.07 million out there. The S, 1.65 million. When we're north of a million contracts this time of day out there in the S, that things are moving along. When we're at 1.65 million, things are getting frothy. The ADV, 2.2 million out there. Small caps, man. Somebody lit a freaking fire under small caps. Good thing was we had the folks from FTSE Russell coming to join us a little bit later today on Twifle. They picked a good day to come on because, man, small caps are, I think the technical term is freaking on fire, at least through the IWM lens. Let's see how much. Yeah, IWM is off 4.5% right now. My goodness, man, they're coming for the little guys. 994,000 contracts on the tape right now. Yes, we're closing in on a million. Who'd have thunk IWM would race to a million way faster than VIX? The ADV is only 713. I say only because that's actually pretty elevated for IWM, but still blowing the doors off that today. They are coming for small caps and coming for them hard. Again, we'll have a deep dive into all things small cap, recon, what's going on out there with the folks at FTSE Russell a little bit later today on Twifo. All you live folks will get it in your ear holes immediately. All you on-demand folks will have to wait till it hits the network. The Qs, 2.06 million contracts on the tape for the Qs as well. So the Qs doing some paper out there today, doing some business. Again, the Qs are kind of used to rocking and rolling right now, but still a pretty frothy day. They're closing in on their ADV as well. So everything's pretty much at or near their ADV, except for VIX, which couldn't care less about what's going on out there today. Let's go out to the single names. Let's see if it's a different story out there. Sometimes when everything's all macro, listeners, the single names kind of get left by the wayside a little bit. That's kind of the case today, but not quite as light as it has been. At least we're north of 200,000 contracts to break into the top 10 today. That gets us out to Uber. Haven't talked Uber in a little while. Uber today, 204,000 contracts on the tape. Good for our number 10 spot out there today. What's up with Uber? Off 1.5 points or 6.6%, trading $20.50. Just a day that ends in Y with a lot of sell-off out there. Seems like it's sucking Uber down and driving some paper today. Number 9, another frequent offender out there. It's NEO, 279,000 contracts. Good for the number 9 spot today. Trading right now $19.15, off about $1 or nearly 5% on the day. So NEO and Uber both feeling a little bit more heat than the broad markets out there. Let's go out to our new friend, the interestingly named Meta. That's trading 162.5 right now, off nearly 7 handles or 4%. So everybody who was clinging to that 200 level, we can just get back to 200 in Facebook. Yeah, not so much. 162.5. Good today for nearly 300,000 contracts, 296,000 contracts. Let's go out to our other friend out there, Ford. They were feeling their oats yesterday, in spite of the fact that they had a pretty large recall going on. I think 3 million vehicles. Today, they're kind of feeling more the thunder off in nearly 90 cents, or a little over 7%, trading right around 11.40 out there. So my puts are good now. At least I'm getting some stock out in Ford land. You listen to oddities if you want to know what the heck I'm talking about. 316,000 contracts on the tape for good old Ford out there for number 7. Number 6, it's NVIDIA. 322,000 contracts a day. Again, a day that ends in Y. NVIDIA is going to be up there somewhere, along with AMD and a few others. NVIDIA today, 156.40 off, nearly $9, or about 5.4%. And again, good for 322,000 contracts. And the number 6 spots on our countdown. Number 5, haven't seen this one out there in a little while. AT&T, a.k.a. what the old timers used to call telephone. 354,000 contracts on the tape today. 1876 is where it's hanging out, off nearly 70 cents, or about 3.5%. Today, number 4, again, it's kind of just locked, this number 4 spot. It's AMD. It's pretty much any day that ends in Y. You could usually guess that AMD is going to be number 4, and you have a strong chance of being right. 388,000 contracts on the tape today. 82.30 is where it's hanging out, off about $7, or nearly 8%, about 7.8%. Then number 3, yes, I said number 3, it's the old Tesla. Tesla falling down our charts a little bit with all the action that's been going on out there, plus what's been going on with Amazon. They're kind of locked neck and neck now for who can take that number 2 spot. 885,000 contracts on the tape. Tesla off another 53 handles, or 7.6%. About 645 is where it's hanging out right now. So again, a far cry from the 1,000 handle everyone was looking at out there not too long ago. Number 2, man, the Amazonians showing that a stock split is good for business, at least from a volume perspective. The brokers like a good stock split. Today, 905,000 contracts on the tape. So Amazon went from kind of being an also-ran on our top 10, sometimes coming in at number 8 or number 9, something like that, every once in a while, maybe once or twice a week. Now it's there every day, and it's fighting for number 2, and it has been number 1 multiple times. So at least from the driving volume perspective, the stock split working out. Amazon 104 right now, off $3.5, or about 3.2%. Again, good for 905,000 contracts. So Amazon lighting it up. But Apple right behind them, the number 1 spot, yet again, managing to kick Amazon to the curb, hold them at bay as well. 990,000 contracts for Apple. 131 and about a quarter is where it's hanging out right now. Off about 4.25, nearly a little over 3% now. So they're coming for Apple. It's pretty much erased the year now. It is pretty much back down to where it was trading about a year ago. So if you have been holding on to Apple for the past, I think it's up slightly, about a handle on the year, but that's really about it. You go a little bit beyond that, we're pretty much back to right where we were hanging out right around April of last year. So yeah, they have come for Apple a wee bit after it kind of threatened to buck the trend a little bit and seemed to be a little bit more resilient than some others. Now they are coming for Apple. They're not really coming for a ton of earnings. We don't have a ton of earnings on the docket right now. We're waiting for the next cycle to kick off so we can kind of do an earnings season proper right now. We talked about Oracle, and on the Monday show, we have Kroger popping off. They were actually before the bell today. Let's look really quickly. We have earnings move results reports coming in hot off the presses from our friends over there at Orats. And let's see, they're at 50.88 going into their announcements. They were pricing in 8.1%. They delivered a whopping 2.1%. Wow. So talk about a little bit of underperformance. Let's see where they're hanging out right now. And you know what? They are actually back to almost unched. They're off about 30 cents now. So wow, they delivered a whole heck of a lot of nothing. So yeah, if you were harvesting the old risk premium in Kroger, I tip my hat to you. It worked out pretty well. We do have some names coming up. Actually, I have Adobe after the bell today. They're at $376.92. They're pricing in $25.78. In the past, they've moved to $20.82. So we bit of extra juice in Adobe. What else do we have on the docket for? And coming up next week, we have Darden Restaurants. That's one of the Meatballs' favorites. We'll do them really quickly. They're on the 23rd. 116.5 is where they were trading. They're pricing in $6.90. In the past, they've moved to $7.36. Let's go out to an area a lot of folks are fixated these days. This is, of course, FedEx. They're on the 23rd after the bell as well. 232 3/4 is where they're hanging out. They were pricing in $16.50 in the past. They've moved $15.50. So a wee bit of extra juice out there in FedEx as well. I mentioned it before. The season came in at about 83% on average, so about 5% below our trailing average now for the last 3 years, which is about 88%. So looking a little bit lighter. They are still tracking some earnings trades if you want to check those out for yourselves over there at theoptioninsider.com. We have, 92 long straddles, 42 short straddles, and 95 long calendars for you to check out there. As we keep on rolling, it's time for us to check out the madness that is unusual activity, because it is time for the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, welcome to the Odd Block, the portion of the show where we get weird, we get wild, we get whimsical. Let's see what our first name, which of those it holds in store for us today. Let's go back really quickly to the name we talked about on Monday. Remember, we were talking about some put love that was going on out there in IMAX. In particular, these were the puts we highlighted back on May 26th. Someone really wanted to scoop a little bit of downside here in IMAX, or they were concerned about some downsides. They came in and scooped up about 5,000 of the June 15 puts. They paid 55 cents, so a little over a 60 vol out there. The stock was right around $15.90 when they put these bad boys up. And we talked about them on Monday. They weren't looking good. The stock was still well north of $15 on Monday's show. And the stock actually rallied pretty much right after they put this trade on. So it was kind of bad timing on their part. It got up to about $17.50 and hung out there for a while until the first week of June, really. So you know anything about buying premium. You don't have a lot of time to begin with. These weren't that long of a term of a trade. And then the first week and change, it goes against you. Usually not a good sign for your long premium type trade. Then, as you said on Monday's show, the stock was back down to about $15.34 or so. So there was a chance they were taking a bath on it at the time on Monday anyway. So it looked like they were going to be out about $250,000. They're going to be out the full amount. But we kept our windows open, saying that could change. Obviously, anything could happen over the course of the next week here. And looks like the stock right now still hanging out right around 15.25. Let's see. How low did it get today? Looks like it got down to about 15.18 today. So it's playing with them. It keeps threatening this 15 strike, but not quite enough. But still, looks like since our last show, the OI is down a little bit. There still are, looks like there were about 5,000. We put these on. Looks like they're about 3,500 still open. So it looks like they came and bailed on about 1,000 of them right after our last show. Yeah, they did actually on Tuesday, so the day after our last show. They managed to get them all for 47.5 cents. That stunned me. These things were 45 cents at 60. I thought for sure they'd be taking a much worse of a bath on that. So if this guy or gal, whoever it was, if they could get a 47.5 cent bid for these things, then maybe they should have got out of the whole thing. They only took off 1,000. So they lost about a nickel on those, actually about 8 cents on those. And then they're still wearing the rest. So yeah, if you could have almost scratched these, I guess you're leaving yourself open for the last couple of days where anything could happen in these crazy markets. But I was surprised with the level they got on Tuesday. And if I had seen that, and you've already ridden this trade through pretty much the entirety of its life. If you can get out for pretty much a little worse than a nickel, maybe you should do it and then live to fight another day. You can put these puts on again, another month. Instead, they might be riding the rest of these all the way to oblivion. Mr. Rock Lobster, what say you? We said they were close. They were flirting with that 15 line. They're still flirting with this 15 line. We could come back in tomorrow, and these puts could be looking good. They have a long way to go before they're break even. So that'd be a big sell off in IMAX. But crazier things have happened, and also the fact that someone got off 1,000 of them for nearly 50 cents the day after our show. I kind of wonder if perhaps he should have gotten the heck out of Dodge, Mr. Rock Lobster. What say you?
Well, I guess it does feel like he's run out of time. You know, Like we're like, okay, you got a day. Yeah, there's still some open interest too, 3,400. So, the funny thing is this market's so bad. Yeah, I think, IMAX could drop another $1 tomorrow and maybe they pay, but I mean, at least right now, it's just not looking very good. Maybe the Tom Cruise movie in the IMAX, maybe that's helping keep the stock up, but.
Yeah, there you go. That movie's overperforming, and so that's keeping this guy's puts from cashing in. Blame Tom Cruise. I like it.
Well, everybody blames everybody else for everything else, so you might as well blame Tom Cruise for IMAX not cratering, right? I'll bet you that would be cool in the big IMAX theater.
All I know is that movie is like blowing the doors off everything. Like it's beaten everything box office wise this year, and no one expected that. So everyone said for years, right? Movie stars are dead. It's all about franchises and IPs. Tom Cruise is like, hey, hold my beer. I can blow the doors off everybody if I want to. I still haven't seen this thing. Everyone's raving about it. I need to go finally see it. I ended up seeing.
You know what I think it is? I think it's just a regular movie. That's what I think it is.
But people just are so excited to see a regular movie now. So that's what it is.
I think they just wanted a regular movie. Just like, hey, let's go to a movie and have some fun. Let's, I think they're a little, I won't go down the rabbit hole. But anyway, as far as IMAX goes,
says the man whose last movie was a silent film from 10 years ago.
Exactly. I saw that and I was like, I'm done.
I'm out. That's it.
I'm not wasting another dime in the movie theater again. I can't believe it. It's got the Academy Award. Like, clearly everybody has lost their minds making movies if they think this is good. Anyway, I think this put is going to go out worthless, basically. They'll be lucky to scrape some money out of this.
That's the sad thing. He could have got most of it on Tuesday. He got lucky. Yep. I can't believe they got 47.5 cents for those. That's insane. So yeah, he should have got while the getting was good, unfortunately. I mean, he wrote it all the way. If you get a bid right close to the end that lets you get out for just a little bit of a hit, and you live to fight another day with most of your troops intact, you get out, man. That's going to be painful. I think you're right, Mr. Rock Lobster. I think this one's going to leave a mark, and this person will look wistfully back at that print from Tuesday and say, oh, if only I had done 5,000 and not 1,000. But alas, that is not the case. Let's go out to a trade. This was a weird one. This one popped up on our odd block and also on our options oddities, Mr. Rock Lobster, back earlier this year. I think we finally get a chance to pay it off. There were a lot of moving parts to this one, so I'm sure there are some legs that we are leaving out of the story here. But in general, we'll talk about the ones we saw and that we parsed on the show. And this was a Turtle Beach. This is one that you and I were all surprised to learn, I think towards the end of last year, there was actually a public company. We've never seen it on our odd block, never really talked about it. And then all of a sudden it started lighting up our tape because apparently someone really had a huge axe to grind in Turtle Beach. Well, we talked about him a couple of times, and then we talked about him again on March 31st. What we talked about, this seemed like a weird trade at the time. It was the May 2330 vertical going up 2,500 by 4,000 times. It's like he paid about $2 for the 23s, sold the 30s, I should say, 4,000 times for 30 cents. So a little bit less, I should say, than 1/2 there, but on a ratio. And then also looks like he dumped at the same time the April 20s for $2.16 and the June 20s for $3.66, 1,000 times each. So it seems like he had long positions on the 20s in April and June. He bailed on those and instead split the uprights and went for a May ratio vertical, 23 by 30. Or 2330, 1 by 1.5 or so. So there was a weird trade at the time. So we said we keep an eye on it. Now we can come back now that we're pretty much to June expiration. By the way, at the time they did this, the stock, where was the stock? The stock was $21.64. So a 2330 vertical didn't seem that outlandish. And now we can come back in to see how that May vertical looked and also see where the stock is trading now. Maybe if they had waited until June, maybe things would have been better. We shall see. So right now, the May, well, by the way, Turtle Beach right now, I'll just get to it. We'll skip ahead. $13.50 off another $1 or 7% today. So spoiler alert, they are nowhere near the 2330 level. But let's go back to May expiration because maybe they got closer then. And looks like the stock went out at about 17 3/4 on May expiration. So still nowhere near the 23 strike. So that May 23 30 vertical, no bueno. But they didn't wait until expiration to do a little bit more business on this thing. This guy's very active, whoever they are here, or gal. Looks like they came back in on April 28th, and they closed out the vertical. Took a bit of a bath on that. They scratched the 30s. They got those off again for 30 cents. But they took a bath on the 23s. They had to dump those for 45 cents. So they paid $2.04 on those, and they sold them out for 45 cents. So pretty much $1.60 to the dark side for them on those. Then they turned around. This person continues to persist in his upside view here in Turtle Beach. Came in and bought at the same time back to June. They bought 2,500 more of the June 18s for $1.45. I think you can see where this is going, listeners. So they took a bath for about $1.60, 2,500 times on those May 23. So they're out about 400 grand there. And spoiler alert, these June 18s with the stock at 13.5 with 1 day to go, not looking good either. So they're out around 360 or so on those. So you're talking about $750,000 just on these legs that we profiled here. We don't even have where they entered into the June and April 20 calls on. They probably took baths on those maybe too. We don't know. Maybe they made money on those. They have obviously money to burn, so maybe they were sitting on some house money. But either way, on these legs, Mr. Rock Lobster, this guy went and did a whole bunch of stuff, and he ended up coming away with a whole bunch of nothing.
Well, we can just see from the stock price. Let's see. 20 calls, 23 calls everywhere. And let's see, I think that was some kind of I think when we looked at this, all I know is the stock is $13. So you could do almost everything you want. I mean, did they roll out of this is another one, right? They rolled out of the vertical after they bought it. And then just the stock went to nothing.
Yeah, and then they bought more calls with their whatever they had left of the vertical, and all of it went to nothing. Yeah.
Right. I mean, I think that's probably the hardest part of, like, I'm never a big fan of rolling down. It's just it's kind of a hard one because then you have to put more money into a trade that's not working. It's not necessarily a hedge, it's just, hey, we're going to try it again. So it's not my favorite strategy. I have to be honest. It's one of the things that Mark and I, when we're doing this sort of the big money flow show, we don't like the rolling down customers because they're rarely ever right? Because there's usually a reason stocks are going down, and and options are not long-term investments. So it's not my favorite thing to do. So it looks like they took a lot of pipe on this trade. And the stock is, Turtle Beach making their, apparently there's no end in sight for high end. People still like the products, but they just don't want to pay the same amount of money for the stock anymore. So, but anyway, it looks at just like this. It was a whole lot of work for a whole lot of nothing.
Yeah. If you're not producing a staple good, I don't think headsets, high-end gaming headsets fall in the staple good category, then you're kind of getting hit right now. All this elective fun stuff seems like it's kind of going by the wayside right now. So, yeah, a lot of Sturm und Drang signifying a whole lot of nothing here in Turtle Beach. I'll have to go back and check what we talked about with the oddities with this name. I thought there was a lot of put buying, like aggressive put buying in Turtle Beach as well. I'll have to go back and see. Obviously, that was earlier this year. It has expired now, but intriguing stuff. Tale of two different trades maybe going on here in Turtle Beach. Either way, people were lighting up Turtle Beach for a while this year. Let's go out to one more here. This is from our January 24th show. We're going back a ways to a month before the invasion of Ukraine. We talked about someone at the time going pretty far out, drawing a line in the sand in AMWL. This is ticker symbol AMWL. This is American Well Corp, a telemedicine company here. They were selling they're blasting away really on the 2.5 puts in this name. They sold a 6,000 lots for 15 cents, so whopping 15 cents. The stock was nearly $4, 3 3/4. So these puts were not exactly risky. And then they came in and blasted away on at least 4,500 more for another 15 cents. So they did quite a few of these 2.5 puts for prices around 15 cents. It's about a 75 vol if you are intrigued, listeners. There were earnings in this. Obviously, since January. There were some earnings. The last announcement was on March 23rd. I don't know if they have their next announcement coming up here. I'll have to check and see. But they might have gotten 2 out of this. Either way, the stock right now over $4, $4.12 to be precise. So these 2.5 puts with 1 day to go are looking pretty good. Looks like they're keeping about $1.50 on this one, Mr. Rock Lobster. So not exactly your girlfriend's Ferrari, but it's a decent Mercedes, or let's say, I don't know, a Tesla, or maybe getting into an entry-level Porsche, sir.
I could see a Ferrari or something like that, but I don't recall seeing on a Porsche. But it could happen. It could happen. Anybody could drive it. It just, again, line in the sand. What's funny is how smacked oil companies have been. I don't know if you want to look at, and I guess that's, again, Mark and I were talking about this, but you're a fund and you're up money, and your oil, everything oil related is through the roof. You're going to sell that stuff because you're getting crushed in other places. So I think that's part of the problem right now. But as far as all that goes, yeah. So I mean, this looks just like a line in the sand put that went right, I guess we could say.
And you know what always goes right? It's your mail. So let's get to it. A little bit of the old mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, we have our question of the week that is live right now. And we asked you beginning of this week, crypto bloodbath going hot and heavy right now. At the time we posted this, Bitcoin was right around 25,000, so it was a nice level. So we asked you quite simply, which level is it going to hit first? 10K, so cut more than in half, or 50K, it's going to double. Let's see if the owner of BitcoinReallySucks.com is with us, or if his technology issues continue to plague him. Mr. Uncle Mike, a.k.a. Mr. BitcoinReallySucks.com. A, are you there? And B, if so, what is your vote, and what is your vote for our audience in our Bitcoin poll here, sir?
Oh, 10,000 for sure. And I think the audience is going to say the same thing.
Interesting, says the man. You're not just talking up your URL now. This is your actual sentiment. Okay. All right. Talking up your online book, as it were. All right, let's go out to the Rock Lobster, man who just loves crypto, can't stop buying it. Mr. Rock Lobster, sir, 10K or 50K, and then what do you think our audience is voting for?
I'm going to say 10K. I think the audience is voting 10K, and I think Bitcoin is just on its road to Palookaville. So,
well, our audience is overwhelmingly agreeing with you folks. 72% hitting the 10K level right now. Only 28% saying 50K. So decidedly bearish on the old crypto. A lot of folks coming into. Still has a day or so left of our question of the week. We'll get the final answers tomorrow on Vol Views, but I have a feeling I know where this one's going. Unless you're a Bitcoin hodler, you want to get in there, buck the trend, at Options is the place to go to make your voice heard. We also talked last week about the SIBO's new open outcry floor. We asked you, do these things still have a place in the modern options market, or are they a relic of the past? And you guys, 45.3% saying yes, they are still important. 30.2% saying nope, electronic or bust. And 24.5% saying, what the heck is open outcry? We need to work with you folks, the last portion there. But the rest of you, I get it. Yes, so a savvy bunch there, 45%. Obviously, they still do add some value here to the market. Speaking of adding value, we got a little bit of odd block love coming in here from, what is this person's name? This is My Name Dave. Well, there we go. His name is My Name Dave. He says, those PK, this was the Park Hotels and Resorts, Inc., ticker symbol PK listeners. Those PK July 17 half puts you guys covered a few episodes back are definitely working nicely. Grabbed a generous amount of those for 50 cents this week and cashed out for $1.15 yesterday with a hands clasped praying emoji. So there you go. Glad to see My Name is Dave and everyone else who enjoys the odd block segment that you're getting some value out of it. In this case, he decided those puts were cheap. He jumped on the train and he's 2x to the good as a result. Mr. Rock Lobster, what say you? My name is Dave. Having some good fun here with our odd block trade, sir.
Yeah, I mean, that's the fun of the odd block. You're seeing what the big paper's doing, and if it's worthwhile, if you can get on board the train. So I don't think I salute him for riding those puts, for getting on the put train and riding them lower.
Yeah, it's a good trade these days, the put trade. It seems to be working out right now.
Yes.
So my name, Dave, and everybody else, congrats on getting on that train. As we keep on rolling into our final stop for this show, it is time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, let's do it. One final time out to the hinterlands of St. Charles. If the technology gods are smiling upon us, Uncle Mike, sir, what are you keeping an eye on until we gather here together on Monday's show?
Well, watching to see if we get any further selling in the 10-year note. A lot of the sell-off this week came before the Fed announcement. So seeing where we're at with that. Also watching to see how far away we get from 3,700. 3,700 was a key number for being where a lot of people thought the bottom might be. So we're there right now. We're a little bit below it. So continuing to watch that. And, by the way, we're recovering from a global pandemic, and there's a war in Ukraine. So watching all those things.
All right, Mr. Rock Lobster, same question for you as you're busy tabulating up all the top gun grosses, sir. What is lighting up your tape? What are you keeping an eye on until we gather here together on Monday?
I think a big part of the sell-off today is this Russians shutting off the EU gas, and maybe bringing that conflict to a new place. But the fact that the gas supplies could be short, that's, again, there's no good news coming out of that conflict, right? Our biggest worry was that this was going to drag on forever and just make everybody miserable, and apparently that has come to pass. So that's worth keeping an eye on as an extra factor in how those stocks can go. I think at this point, like earnings and everything else, I don't feel like it's mattering that much. It's we're kind of consumed by these macro issues, and until there is some sort of policy boat to float us out of them, I think the volatility will stay. The market will stay soft, and I think we're just going to have more of the same here until, like I said, until we see a change.
That does, unfortunately, appear to be the case. It also appears to be the case, listeners, that we are out of time for this episode. But don't worry, if you're saying to yourself, man, I need more. I need more of this content in my ear holes. Well, don't worry. We're coming right back at you in a little bit with TWIFO This Week in Futures Options. Got the folks from FTSE Russell coming back in to the FTSE Russell hot seat for the first time in quite some time. Picked a heck of a day to do it. A lot going on in small caps. We're going to dive deep into all that madness and a whole bunch more coming up for you live folks in just a little bit, for all you on-demand folks when it hits the network. But let's go back around the horn now. Let's go back out to the land of St. Charles. I do believe he is about to pull into the station. Before he goes, Mr. Uncle Mike, sir, if folks want to join you in the beautiful land of St. Charles, where should they go? What should they do?
Well, come to St. Charles downtown. We got Riverfest coming up, Scarecrow. Anyway, if you are looking for a financial advisor who looks at the option product and wants to be prepared for Fed events and things like that, feel free to reach out to me. Check out my website, stcharleswealth.com. Follow me on Twitter at Mike TOSAW, TOSAW. I try to put out a lot of content. And you can check out my YouTube channel. Just type in St. Charles Wealth Management.
The man's quite the rising YouTube star. Check him out on the old tubes over there, listeners. But the journey begins at stcharleswealthmanagement.com or stcharleswealth.com, or if you're really hardcore, bitcoinreallysucks.com, which hopefully he's got that redirect up and running right now. And as he's busy slamming crypto to me in the show chat, listeners, Mr. Rock Lobster, folks want to go debate crypto with you one-on-one. Where should they go? What should they do?
You go to optionpit.com, 888-trade01, call Ted. I launched a new product called Spy Master. So it's a combination of SPY and VIX together. It's a hedge trade. So it's unique, I think, for our industry. I've been working on it for a long time, and I launched it last night, just started. So head on over to optionpit.com. If you heard this show, if you say you heard this show, you get 10% off. because, we are friends of the network. And yes, and if they want to talk altcoins with me and Option Pit, they always know what my answer is. They suck. So I have zero interest in those coins at all. But hey, what the heck? It's just an opinion, and that's.
You should get a piece of TOSAW's BitcoinReallySucks.com. He might want to share that with you.
Yeah, maybe he'll farm it out.
A little $10 each. You guys split it, and you're in for the millions as a result. Here, check him out, Spy Master. So he's finally written that book on spycraft that we all wanted, listeners, from his years with the CIA and espionage business. Check him out for yourselves. OptionPit.com is the place to go to learn more. We have to get on out of here. Live folks will pump some fun stuff in to the live. Back again in a little bit to break down the madness that's going on in small caps and all things futures options on TWIFO. Back again tomorrow, noon Central, 1 p.m. Eastern for Volatility Views. Back again after that for all you cool kids with Options Oddities. Then back again on Monday. Actually, I take it back. We're off on Monday. I lied to both of these gentlemen. We're off on Monday. So we're back again on Thursday for this show, another episode of the Option Block. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.